Oh man, with the Bitcoin halving edging closer, with the SEC being delivered a damaging blow in the XRP case, we could be starting to get ourselves set up for the next bull run. And many of you are sitting on a portfolio which is ill-equipped to give you the kinds of gains you want. In this video, I'm going to be going through the altcoins, explaining which ones I will be avoiding, which ones I want to be stacking, and making sure I'm carrying through to the next bull run. Remember, this is all financial advice. Please do your own research. If you want to buy any of these cryptocurrencies, you can do so and support the channel through my affiliate link, ijaz.uk/Bybit. Guys, I'm going to give you some home truths here. I'm going to mention some altcoins which you may not like, which I want to add. I may mention some which you do like, which I'm not comfortable adding. But again, it comes down to your risk tolerance, your level of conviction. You may have done better research than me on certain altcoins, right? I can't know all hundreds of altcoins, but we're going to go through and I'm going to talk about which ones I like. As you can see right now, markets are feeling quite positive. Bitcoin's still back above 30,000. The XRP case delivered a lot of euphoria in the market, but I did share why I can expect there to be a little bit more of a bumpy road before we trigger that bull run. But rest assured, it's coming. We just may see a little bit of flushing out of some of those leveraged long positions before we're ready for an explosive move. If you haven't watched my video from yesterday of when that alt season can trigger, make sure you go watch that, because I do share some specific times of when you could expect that run. Now, let's jump back into the list. It goes without saying, right? I know this is about altcoins, but Bitcoin and then Ethereum, they've got to be anchors of your portfolio, right? So many people, there's a new crypto investor and trader born every single day. They neglect the basics. Why is it you don't want to stack Bitcoin, Ethereum? It's an absolute no-brainer. From an SEC perspective, particularly with Bitcoin, we know it's a commodity, right? Yes, there's a little bit of a risk with Ethereum because they moved to proof of stake. That's yet to be determined. But again, not mentioned in the SEC's case, right? Where they listed 13 altcoins in the Coinbase and Binance lawsuit, Ethereum wasn't mentioned, right? So for me, absolute no-brainer, stack my Bitcoin, stack my Ethereum. If you've been watching my channel for a while, I call this eating your veg. Just eat your veg. Before I let myself buy some lower cap altcoins, I want to be adding Bitcoin, I want to be adding Ethereum as well. Okay, then you come down and start looking at XRP, right? And the XRP case starts to become really, really interesting. Huge community, strong community, loyal community. They've now got precedence. They're the only altcoin here, right, that has now won a case against the SEC to say that anything sold programmatically, not the ICO, not the institutional sales, the programmatic, through an exchange, is not deemed a security. So this increases the stock of XRP dramatically. When you now buy XRP today, you're not buying in the same, it's not the same product you're buying a couple of weeks ago. It's a major stepping stone. Now, of course, this is complicated. There's going to be appeals. It could go to a higher court. The SEC is not just going to give up, because if the SEC give up on this XRP case, they're giving up for all the other altcoins, right? So we continue to back XRP. And again, this becomes an interesting concept to add. Again, if you're adding XRP, the risk has gone down after the ruling, but it's still a risky play, right? It still is a little bit of a gamble, so you have to base that, add that to your portfolio based on your risk appetite. Now we're going to move on to BNB. We're looking at the exchange tokens. And again, if you asked me before the case, I would have said to steer clear of exchange tokens. That being said, Binance Coin, when you go back and look at 2021, when it started running past $400, it just kept going. It's like a rocket ship, because this is the ecosystem token of the biggest exchange in the world, driving billions and billions of dollars in trading volume every single day, right? That token's going to do well. Now, personally, I don't like exchange tokens. I didn't like them before. I've stopped liking them now, right? Particularly when you look at how the FTX incentive structure was set up and the FTT token. Exchange tokens, there are better things to hold. That being said, that doesn't mean Binance token can't run. It can run. And particularly after this SEC case, with Coinbase and Binance now looking like they're in a good position to go and fight that case with the extra quiver in their bow, now that XRP delivered the SEC a big hit, that's going to put BNB coin in a better position. But again, for me, something I'm staying away from. I've got a little bit of BNB, but I'm not actively adding it. But I'm just also not selling that as well. Now we move on to the next narrative, which is, for me, a lot of people try to reinvent the wheel, right? We're going into another bull market. We're going to be going into an altcoin season. And a lot of people want to reinvent the wheel to pick the next exciting project. And I agree. The next exciting project will be something we've not heard about. It's maybe not out yet. It might get launched in the next 2 weeks, 2 months, 3 months, 4 months. Who knows? We've got to be prepared and keep doing our research. But one thing is for sure. When you look at the crypto space, we are looking for infrastructure plays. If there are infrastructure plays that allow dApp developers to build, that is what's going to be valuable, right? If we want to grow this ecosystem, it's going to come still through layer one scaling solutions. That's just how it's going to be. So the narratives will continue to be Bitcoin, Ethereum, layer one plays, and then your layer two plays. So there is no good crypto portfolio which does not have a good portion of that portfolio sat in the layer one plays which you think could be in for a chance to dominate the space. And the reality is we don't know which one that could be, right? It could be Solana. Yeah, I've mentioned very clearly how many issues I have with Solana in terms of their downtime, the stuff that went on with FTX. It could be Solana. A lot of activity still goes on with Solana, a lot of development still going on with Solana. That being said, I think there's some tokenomics issues in terms of people selling their Solana, right? There's always going to be that sell pressure as Solana bumps up in price, but it's doing well here. Look at it, up 31% here. Now, I didn't sell my Solana position. I told you guys I got in very early. I wasn't adding to it, but I didn't want to sell it either because I was break even on it, and now it's nicely in the green. Great, fine. Let's see where it goes from here, and maybe I'll change my mind if I can see some improvements in the tech and not seeing much downtime, that maybe I'll start getting in a position to add again. I'll let you guys know if my conviction changes and when it does. Then we look at something like Cardano, right? Does Cardano still deserve a part in the portfolio? I've been disappointed, right? I've been disappointed through the bear market and the lack of progression I've seen. That being said, the metrics are starting to look okay, right? It's not a complete ghost chain like it was when people started investing in it, myself included. They have built, people are using it, but they've got to make this bull market count. If they don't make this bull market count, I could be looking for a quick escape clause here on Cardano. But again, what's the reason I hold Cardano? Cardano in my portfolio is the antithesis to Solana. I've said this from time. If you've been watching my videos for years, when I hold projects, they've got to have a reason to me holding them. It's not because somebody on Twitter or this community, oh my God, it's so hyped, I want to hold that token, couldn't care less. Strategically, when I buy Cardano, the way I'm thinking in my brain is going, hang on, Solana, Near Protocol, some of these other layer one solutions, Phantom is a great example. Moving fast and really trying to innovate. Great tech, moving fast, doing things. Great. Well, what's the downside of that? You make mistakes, right? You make mistakes. Look at companies like Facebook. Facebook made mistakes when they were scaling one of the fastest social companies of all time. They make mistakes. Right? Cambridge Analytica, sitting in front of the Senate, Mark Zuckerberg every other month, right? They face problems. Solana faced the problems as well. Downtime, creating congestion on the network. Phantom now with their multi-chain hack. Again, that's not Phantom itself, but it's an ecosystem, right? It's part of this, the main bridge on the system, damaging all the protocols. It's a problem. We spoke about that before. That's what happens. So when I put some money into Cardano, I'm going, hang on a second. Chill out each other. What if these ones which are moving fast just break things? I need a hedge in my portfolio. I need something in my portfolio that's a little bit slower. A little bit peer-reviewed, academic, research-based. Not something that I'm going to wake up one morning and the whole Cardano network's broken, right? That's why I want to add to those plays. Then we start thinking about layer twos, right? So in layer ones, you then want to say, okay, what are my layer ones I like? And therefore underneath, which other more risky layer one solutions do I like? Do I like Aptos? Do I like Sui? Neither of those have really grabbed my attention just yet. I'm going to continue to research them because I don't want to have like a blind spot. But at the moment, they're not exciting me. I can't see any value there that I want to be adding into. I'm going to keep researching them and see if that changes. So for now, Cardano, Solana, Phantom, right? What about something like Near Protocol? You're adding something like Near Protocol to the mix. That's something you've got to look at as well. Then you've got to look at other things like layer two scaling solutions, right? What about layer two? Are you in Arbitrum? Are you in Optimism? Are you in Polygon Matic? And if you don't know which one you like, it's okay to say, you know what? I'm going to go for all three. Instead of putting $1,000 in each, why not go, okay, instead of putting $3,000 in one, put $1,000 in each of those three. Spread your portfolio. That way you've got a nice bit of the portfolio that when the narrative of layer two scaling solutions start running in the bull market, you look at your portfolio and go, yep, that sliver of my portfolio, but I've got my layer twos in there, they're going to benefit. Then you need to ask yourself the other questions. What about utilities? Individual utilities are going to be needed. When people are building dApps, when people are using blockchain, they're going to be needing utilities. So you want to go through the list and say, okay, what have I got? What about privacy coins? Do I have something like Monero? With the SEC doing so much to try chokehold crypto, do I have anything from a privacy point of view? Maybe you want to go for Monero, Zcash, right? Maybe you want to go something like that. Then you might look at it and say, hang on, I don't have a decentralized exchange. How can I not have exposure to the biggest decentralized exchange? We saw the crackdown that the SEC is trying on Coinbase and Binance. What if the SEC is successful, right? Isn't that a possibility? Of course it is. Am I diversified? Do I have exposure to some decentralized exchange? Then we want to go and say, hang on a second, that doesn't stop it either. What about Data Oracle? I don't have a Data Oracle in my portfolio. None of these dApps would exist if they could not get a data feed in. What do I have? Do I have access to something like Chainlink? You've got to ask yourself these questions. These are the things which are boring, but time and time again, how is it that Chainlink here in the middle of a bear market is still sitting at $3.7 billion in market cap, sat there at the size of 2020, sat there 22nd here on CoinMarketCap? Oh, not because of a community. There's no one flying the flag, tweeting every 2 minutes, oh my God, get yourself a bag of Chainlink. No, because people use it, right? Because people use it. And ultimately, that's all that matters. The social media fandom will go up and down and have waves, fine. You got to be able to do a bit of marketing, I get that. But ultimately, if people are using it, you'll see it continue to do well. So that's the narrative you want to be looking at. And then the other narrative, which is really, really important, and again, hopefully it will become less important as we continue to defeat the SEC, but we've got to understand that the SEC has been going after proof-of-stake plays. They have been. Look at the list of what they went through when they went through the issue with, but when they sued Binance and Coinbase. All proof-of-stake plays. And so suddenly we saw that they launched their exchange Prometheum, right? The one that they backed clearly. And they launched a bunch of proof-of-work chains and Bitcoin forks. So maybe for this bull run, I might be thinking to have a sliver on my portfolio again. I'm like, hang on. If the SEC really start targeting proof of stake, which by the way, Ethereum now falls into that guise as well, then apart from Bitcoin, I have no exposure to proof of work, right? And is that okay? Proof of work is the original consensus mechanism for crypto. It's the one that's been proven since 2008, not proof of stake. Proof of stake is a newer invention, right? And we don't know where the SEC stands on it. So if the SEC were, and again, thinking hypothetically, to win their battle against proof of stake, where does that leave our portfolio? For a lot of you guys, that could wipe up your whole portfolio. So now we need to go, okay, why not have a few Bitcoin forks? What about Bitcoin Cash? What about Bitcoin Single Vision? Do I want Ethereum Classic, which is the proof of work version of Ethereum? What about if I don't want to go for any of those forks, because I know a lot of people don't like forks, myself included. What if I go for something like Casper, right? Layer 1 on proof of work. What if I go for Cardano? Again, I made a video comparing Casper and Cardano, but let's start thinking, okay, if all the layer 1 scaling solutions in my portfolio are all proof of stake, do I not want one or two that are proof of work just to spread out the risk? And this is how an investment manager would think. They want to hedge their portfolio. That's why they're called hedge funds, right? The people you pay millions and millions of dollars in fees because they hedge your portfolio. They diversify your portfolio. They make sure you're spread out so your risk isn't completely focused on one thing. Now, of course, if you've got a tiny amount invested in crypto, and I'm talking a tiny amount, then diversification isn't for you, is it? You want to build your portfolio. And for that, you guys need to get your income up. That's a different conversation. You can't build a portfolio with like, a couple of $100. No, you need to either trade, get your income up, practice trading, start earning $50 a day, $100 a day. It's possible through trading. I've got a day trading tutorial set up, which I'll link up for you guys as well. And then when you start to get a bit more meaningful money, again, don't want to be, degrading. I'm just saying you need a decent sum of money to start investing. That's when you want to diversify because you want to protect your money before you grow your money. You can't grow it without protecting it, guys. Okay, so that's what I'm looking at here is making sure I've got my portfolio spread out across a lot of these different portfolios. Now, what would I be avoiding right now in my portfolio? Personally, for me, I'm avoiding 3 key narratives. Meme coins, I'm avoiding NFTs, and I'm avoiding gaming. Now, why? Why do I say that? I'm not saying that because I don't believe in those narratives. I believe all of those narratives will have a moment when they all pump. And I might even miss those. But what I have seen historically is that there is a rhythm to how the money flows. And at the moment, we need to see Bitcoin run, right? I know everybody's excited about altcoin, but again, like I explained in yesterday's video, I think this altcoin narrative here over the last couple of days is just about the XRP case. Once that's settled down and the liquidations happen, we need to wait for Bitcoin to go on its next run and start working its way to the upside through these levels and start playing out our longer term price target of 37. You can see from this falling wedge, price target's at 37. You guys know we've got a big cup and handle pattern, price target at 45, right? That takes you all the way up there to 45 on that price target on the cup and handle pattern. This is what we need to play out. The other pattern I can show you is a bullish continuation pattern. Look at this bull flag here we're forming. Takes you up to 37,800. So we need Bitcoin to move. We need Bitcoin to move. I think Bitcoin dominance can have another leg up. Again, I go through that in my all-season video yesterday. Bitcoin dominance is an upward trend here. And yes, it may be pulling back a little bit here. It can pull all the way back down to 48%. That's fine. Come down here, go back for another leg. Because if I zoom up to the weekly, Bitcoin dominance has room to grow. It went up to 73% before the last halving, right? In 2020. That's where it went. Now, that doesn't necessarily mean it has to go to 73% again. But can it go to 60? Can it go to 65? I feel like it's got more room to go. And if Bitcoin can go on its leg, that's how every bull run has gone. Money comes into Bitcoin. That money then wants to spread out to more riskier, higher yield plays. Then it goes into Ethereum. Then it will go into Solana, Cardano, other plays. Eventually, it will trickle down towards the end of the bull market, in my opinion, to the more risky plays. And I think that is the narrative when you start to see gaming move, NFTs move, you start seeing meme coins move sporadically as well based on news and Elon Musk tweeting or whoever else is tweeting. And then you start to see the bull market finish. Right? And no doubt there'll be a new narrative. Maybe real world assets will start moving as well, or some other narrative which is exciting. Okay, and again, if you want a video breaking down real world assets, you've got to comment in capital letters RWA, and I can get a video, because a lot of people are missing out on this narrative, which is real world assets, even though some of the biggest crypto funds managing billions of dollars are all over this narrative this year. If you appreciate this video, guys, then you're going to love this video here, which I posted yesterday, explaining when exactly I'm expecting this alt season to go on for, and how long I think you have left to accumulate. Hope you guys enjoyed this video on a Sunday. If you appreciate it, smash up the likes, go watch that video here, and I'll see you in the next one.